and welcome back to Dukascopy TV. I'm Natalie MacDonald. Up next, we've got some sweet talking for you. Lionel Rossini of Agrifert is in the studio now to talk sugar. Lionel, thank you so much for coming in today.
Thank you for the invitation.
Okay, now before we delve into the nitty gritty, firstly, can you walk us through your fundamental outlook for the sugar market at present?
Okay, but today there are a lot of sugar because the production in most of the producing countries were very good, and we are actually in a surplus situation where there are more sugar than demand. Then fundamentally the price should has eased if you compare to 2 years ago, and I believe it's still going to ease a little bit more because on top of that there's very little demand because the stocks at destinations are very high. Then fundamentally we are in a situation where we are more or less sitting on a huge pile of sugar.
Now, next up, we've got El Nino, which is really very, very present in discourse regarding this sector at the moment, with the potential to impact major producer regions. How could this phenomenon play out on ATR and also cane production?
Well, actually, El Nino will work on two different ways. First of all, is how we perceive El Nino, how we anticipate the effect on the crop, and the actual effect of El Nino on the crop. Then, if you remember, in 2008, El Nino had a huge effect on the crop throughout the world, and the ATR reduced, the production of cane reduced, and at the end we saw the market soaring to very high levels. Now, this year, El Nino, as it is for now, we cannot evaluate the impact on the cane and on the cane production, on the ATR. Therefore, it's more or less speculative game, and El Nino is affecting the sugar price by the effect or the perception that the people have on anticipation of what El Nino will do to this crop. Then, in a very boring market, because those days the market has been quite boring, very little demand. Like I said, El Nino is coming and giving us the possibility to play a bit of volatility because, for instance, 2 months ago, the Brazilians were playing it like it was like a drama. El Nino will kill the cane, the sugar content will go very low and all this. And they really mastered to push the market 100 points higher just on that, because the perception of the market was like, they might be right. But it was not proven. And now we saw the market moving back down. And I think as time goes on, the El Nino effect will more or less phase out, because I don't think that the scientific were able to calculate any damage on the crop for this year. Then El Nino has just been a kind of actor, a tool, man. I would say a tool that the producers have used for raising a bit of a kind of concern and alarm, but as it is, I don't think we see a lot of damage caused by El Nino this year, neither in the Brazilian crop, which is happening now, nor to the Indian, will come in October, and therefore it will have just been a game. In a boring market, it's good to have such thing, because otherwise the market will have been very dull.
Creates a little bit of a rush for everyone. I mean, there is the fact that, you know, drought linked to the 2007 El Nino did cause a spike in food prices overall. How could this subsequently play out when we actually have sort of a period of low food prices at the moment globally?
El Nino itself is one thing, but it has to be combined with something else. In 2007 and 2008, there was a huge increase of demand, and the level of stocks at destination were low. Then countries were replacing their stocks, and at the same time, there was a catastrophic crop in Brazil, in India. India became a net importer, when it's normally a net exporter. Then, therefore, the El Nino had a kind of a leverage on the El Nino effect. But as it is, even today, if El Nino happened to be true, I mean, on the sugar cane production and affecting the cane production, the demand is very low. The demand is very low. If you look at the stocks in West Africa or even the stocks in Europe, they are huge. And for people to replace their stock, they need the price to move at least another 500 points lower, which is which might take a lot of energy to happen. Therefore, even if today the El Nino will have a slight effect on the Brazilian crop, and we might see it only at the end when the tail of the crop is done.
You need something else as well for it to cause sort of a major change.
For now, the market is definitely going down, and it will go down more. Now the question is to see how it's going to go down, if it's going to go down directly, or it's going to play like this, up and down, but phasing down gradually. That's the only thing that concerns me, is to how the market is going to go down. But definitely it will go down, because today the demand is lacking.
Lionel, thank you so much for coming in and sharing your expertise on this topic. Thank you very much.
No problem, thank you.
That's all we've got time for right now, but we'll be back shortly with another exclusive interview from an insider from the markets. Thanks very much for watching. Goodbye.